Good day to our audience and panelists, and welcome to this Access Partnership webinar on FinTech growth in emerging markets, key lessons learned from industry leaders. The webinar will be recorded and will be available for download from the Access Partnership website shortly. I am Colin Thompson, Head of Infrastructure Practice with Access Partnership, and I will be your moderator for today's discussion. Access Partnership is the leading global public policy consulting business focusing on the tech space. We monitor international markets to identify and drive emerging opportunities and mitigate risks to our clients, their technologies, and services. Our agenda for today's session comprises 4 components. We will have introductory remarks from Chris Casarubias, Access Partnerships Head of Emerging Markets. We will then hear the thoughts of our keynote speaker, Mr. Diego Herrera, the lead specialist for financial markets with the Inter-American Development Bank, before moving on to our fireside chat, where Diego and I will be joined by our industry experts to explore their key lessons from their experiences of FinTech growth in emerging markets. Finally, we'll have our question and answer session. This is yours, our audience's opportunity to submit your questions to the panel. Please submit your questions using the chat box function on the platform. With that, I'll turn to our first speaker, Mr. Chris Casarubias, Head of Emerging Markets at Access Partnership. Over to you, Chris.
Hi, Colin. Thank you very much, and good afternoon and morning to our fellow panelists and to the audience that is joining us today from different places and time zones. As Colin said, I lead the emerging markets practice at Access Partnership. I'm delighted to be part of this relevant and timely conversation today. Why relevant and why timely? Because as you know, in many emerging markets, gaps and deficiencies in the banking system have limited business growth, constrained consumer demand, but more importantly, have harmed economic growth. In many cases, still legacy financial services organizations are cautious in engaging with the less wealthy individuals or with small and micro enterprises. As a result, several businesses and millions of people have no access to basic financial services. We're talking about saving, borrowing, investing, or transferring money. According to the World Bank, these unbanked are globally 1.7 billion people. This means that 1/3 of all adults lie outside our traditional financial system. And as you can guess, most of them live in emerging economies. By harnessing technology and bringing new ideas into finance, FinTech has had remarkable business success while including more and more people in the financial system. And this happened in countries as diverse as Kenya or Brazil. FinTech is helping advance sustainable global development through financial inclusion. This in turn reduces inequality by making the financial system more open, more competitive, and more diverse. Just take a look at the companies represented in our panel. FinTech has also challenged traditional structures and created efficiency gains by opening up the financial services value chain. I insist, just take a look at the companies that join us today. In Africa, for example, FinTech has been a catalyzer of change and opportunities. In 2014, mobile phone-enabled banking burst onto the scene in Kenya, and shortly after, 1/3 of the bank population was using mobile money accounts. M-Pesa is indeed an African success story. Through mobile phones, M-Pesa made borrowing more efficient and allowed users to build a credit and transaction history, essentially turning the payment platform into a gateway for further financial services. It didn't take much time before this model was expanded to neighboring countries, and the rate of financial inclusion in sub-Saharan Africa rose from 34% to 43% between 2014 and 2017. Any policymaker in any sector will dream of achieving these results. FinTech has also for long been a transformational force underpinning countries' digitalizations. However, while substantial progress has been made over the past decade, the starting point was so dire that there is still much to do. And this means a big opportunity for the FinTech industry in emerging markets. And we know something, emerging markets are some of the most exciting in the world. They are fast growing, they are profitable, and they're a hotbed of innovation. Once again, I insist, just look at the companies we have here today. There are great examples of companies that have been proactive and innovative in developing new business models in response to the specific challenges of these markets. And this is also positive because traditional banking players are, as a response, innovating more and banking more inclusively, incorporating more technology. The incumbents who adapt can be expected to emerge stronger and engage in a virtuous competition with new players. This is happening, for instance, in Brazil and Mexico, where enabling regulations and actions from central banks and regulators are supporting the country's fintech ecosystem and the transition towards a more open banking framework. It's no surprise that fintech is attracting enormous amounts of capital globally, and to a large extent, this is due to this combination of opportunity and creativity. This is very encouraging, no doubt, but there are also very good reasons to be cautious. Poor regulation and lack of sufficient policy incentives for the ecosystem to thrive and untap its potential. Deficient, or in some cases insufficient, connectivity infrastructure, which in turn is a building block of financial digital tools and services. Lack of strong data systems that help make better policy decisions. And finally, lack of rules, oversight, and response capacity to deal with cybercrime. These are only a few examples. So how exactly do fintech navigate emerging markets? Searching for answers, Access Partnership interviewed leading businesses in Latin America, Africa, and the Middle East, including ride-hailing and payments platform Didi, digital payment player Paystack, and digital wallet platform Whistle. With their insights, we're now ready to share key lessons to help companies developing disruptive technologies in emerging markets. Our report is now available to you in our website. To extend this conversation, I'm pleased to welcome fintech leaders that come from very different backgrounds, but share at least one thing in common, which is the belief that technology is an enabler of societal change. Welcome, Naomi, Elvis, Mauricio, and Diego. We're very privileged to have you with us today. With that, I thank you and pass it back to you, Colin.
Many thanks for that introduction, Chris. Very useful. We'll certainly be touching on many of the issues you raise in our remaining time, not least the fintech opportunity and the lessons from our speakers on how to address the regulatory, security and competition issues you touched upon. Now to our keynote speaker, and I am very excited to introduce you to Mr. Diego Herrera, the lead specialist for financial markets for the Inter-American Development Bank. The bank's remit covers financial regulation, capital markets, fintech, financial inclusion, and productive financing. Mr. Herrera also leads the Fintech LAC initiative, a platform for promoting the fintech ecosystem in Latin America and the Caribbean. In the past, he was Superintendent of Market Risk and Integrity at the Financial Superintendents of Colombia, and he has served as Chief Risk Officer in the private sector in Colombia. He is also the author of several academic publications on financial regulation and micro, small, and medium-sized enterprises. With that introduction, Mr. Herrera, the floor is yours.
Thank you very much. First, congratulations on the report. I read it through yesterday, found it very informative, and I recommend everybody to download it. It's very, very interesting. Thanks to Christopher, to Colin, to Yamel for the invite and for putting together this event. I'm going to move really fast through my presentation. Essentially, I wanted to show a perspective on the public policy for fintech in Latin America and the Caribbean, which is a very complicated but at the same time interesting issue for the region. So essentially, we've been working in the ecosystem since 2013, in the fintech ecosystem since 2013, December 2013, we started working in this. And the first actual public policy that we moved on with was Mexican, at that time, crowdfunding regulation. We started working with the Securities and Banking Commission in Mexico in 2015, and that later on translated into larger fintech law that all of you know, and where we had the great honor of participating. Since then, we've worked with 10 governments, at least, the Pacific Alliance group, and so forth. And essentially, the first message and the first thing we always talk to with every regulator and every supervisor is that this is not a matter of applying the same rules as for banks or other financial institutions. This is a matter of applying the regulation that is proportional to the actual activities of the new platforms that are incumbents in the financial system. So it's a matter of creating a new regulation for a new financial type of intermediaries and other types of platforms that are actually working to provide financial system products. I would like to invite you over to our FinTech LAC meeting. FinTech LAC is our public-private initiative. I will just leave you with this QR code. Take a snapshot or take a picture of the QR code. It will be available also publicly. So please, it's a good scenario to debate on all the topics related to public policy in Latin America and the Caribbean, and we will wait for you there also. So as I was saying, our network comprises 23 regulators, 13 chambers and fintech associations, and we've produced several publications on the fintech ecosystem. This is just one of it. We have found that the ecosystem has around, for 2020, around 2,300 platforms. This is the data for 2018. For the end of 2018, we are seeing a similar distribution for the upcoming publication that we will have in 3 weeks on the fintech ecosystem for Latin America and the Caribbean. But essentially, 50% of the ecosystem is explained by payments, alternative finance, which each of those verticals have around 25% of the total, and then management, financial management for enterprises, and individuals are the next vertical, and so forth. We saw a larger increase in the number of fintechs that are working in the crypto space in particular during the last couple of years. So essentially, the distribution per country has not varied a lot, with the exception of growing up a lot as opposed to 2018. That time we had 1,166 platforms. Now we have more than 2,300 platforms. That's a huge growth. And the composition is basically the same. Brazil and Mexico, as Christopher mentioned, have regulations put in place, and that creates a proper scenario for fintechs to grow. So they are leading the ecosystem, followed by Colombia and Argentina, and this hasn't changed very much since our last study, and that is explained mainly by the regulations and some other topics that I will touch upon later on. Really fast, the next one, we talk about COVID-19. We have various sensations on the side of COVID-19. The response on the side of the fintech platforms has been relatively good. However, the region has a huge challenge in terms of digital adoption, and mainly two types of populations. The vulnerable populations don't have access to the tools that are needed to have access to financial services through digital mechanisms, and same for the older populations. Besides of that, we've seen growth, especially in the payments space, between 24 and 32% for 2020. And for instance, more than 10 million new financial services accounts were opened in the region, according to the data that we gathered. So it's a very interesting phenomenon, because in the end, fintech has been helping out in growing up this number of accounts. However, many of those accounts are banking, traditional legacy banking accounts. And the main reason is the government transfers to the public, which has been a really complicated situation for us in the region. Next. Essentially, I will leave these two following slides. This is a study that we hold with Cambridge University, just to show you the, in the next slide, the differences between all the verticals in alternative finance and crowdfunding, and how all of the countries have different compositions. But I want to highlight something, and this is very important. It is that of $1.8 billion that were destined to for financing through alternative finance and crowdfunding, 66% of that amount was destined to micro, small, and medium enterprises all across the region. So that's very important, because the potential that fintech has for financing productive development is really, really important. In the details of a study that we will publish with Cambridge University too, you will see how these fintechs, how these enterprises go to the banks, are rejected by the banks, but when they go to the fintech, they even receive support in terms of how to present their documentation and how to be proper in terms of accessing to the financial system, and mostly in terms of accessing to credit. So that's very important, and that's something that the traditional sector does not offer to MSMEs across the region. So regulation is a huge concern. The platforms, there's a mix between the platforms identifying as non-regulated and identifying the possibility of having a proper regulation put in place. The truth is that only Mexico, Brazil, and Colombia, and more recently Peru, have regulations put in place for the fintech ecosystem, or for parts of the fintech ecosystem, and only four of all the jurisdictions in Latin America and the Caribbean, if we continue with the next slides, have put in place other types of, let's say, regulatory innovations. Next slide, please. These maps will, before the maps, I'm sorry, I forgot about this one. So essentially, we are working with the governments in creating the institutional and legal aspects for the regulations, institutional capacity, training people. We've trained more than 70 public servants from authorities, financial authorities from all across the region. And we are also helping them out in getting the proper technology for their supervision and regulation. Essentially, what we see here in these maps is the evolution of fintech regulations. We have seen that more and more countries are starting to get the things in order, putting in place regulation and public policies. However, we've seen that there's a lot of work to be done in terms of even the most popular segments, such as digital payments or crowdfunding. Only two countries have low amount payment systems put in place. They are Mexico and Brazil. The other countries are thinking of them, or in the way of doing them, or trying to create public policies for that topic, but it's complicated. There's a lot of regulatory capture. There's a lot of issues that impede that advances to happen. Same for open banking, and we are seeing more and more regulations towards. So we have seen more and more regulations focusing in crowdfunding recently. This is another publication that we have on regulatory sandboxes. I recommend to take a look at it. But essentially, what we found all across the region is that we have only found 4 jurisdictions with regulatory sandboxes, very few jurisdictions with innovation hubs, very few jurisdictions with accelerators coming from the financial regulators. And most of the jurisdictions, after a survey that we had, that we published in a publication the following week, we found that many countries have accepted having, let's say, informal dialogues with the fintech sector, but that's not enough. We think that having a unique entrance, a regulated entrance, and a clear, let's say, mechanism for fintech platforms and regulators and supervisors to talk and to share ideas, it's important. And to that extent, we are promoting the, let's say, creation of innovation hubs We are working currently with the governments of El Salvador and Honduras in creating their innovation hubs. We helped out with the sandboxes in Mexico and Brazil for in the case for Brazil, for the CVM, which is the securities regulator. And we are seeing how more and more governments are getting adapted to and more prone to get these innovations put in place in their jurisdictions. I think it's just a few slides before I finish. And we are promoting the multi-jurisdictional approach, which is one unique, known, and regulated door to go through many jurisdictions, 2 or more jurisdictions. And in the case of regulatory sandboxes, test the innovations in more than one jurisdiction. In the case of innovation hubs, having the opportunity of talking to more than one government to access more than one place. In conclusion, the suggestions and the recommendations that we're delivering in general to our countries are first to regulate their ecosystem, to regulate exactly the activities and proportional to the activities that the fintech platforms are doing, create the regulatory innovations such as innovation hubs for less developed ecosystem, and regulatory sandboxes for more developed ecosystems, and foster innovation. And that means shifting and changing their mindset from let's say being the police to being a fosterer of innovation. And that's a hard step to take for many of our policymakers and regulators in the region. And last but not least, I would like to say that I always talk to them and I always say to our policymakers, investors want to have the regulations very clear, to clear the regulatory chill. If there is no regulatory chill, no investors will show up in your country. Secondly, having to their minds that volume and scale are important for innovators and for fintech platforms, and that diversification, that means finding new partners, creating more larger clients bases are very important for innovation, and that is only achieved if we have clear rules and let's say conditions set for better ecosystems. That's it on my side. I'm sorry for being too brief in some of the aspects, but I want to say that that's the way. This is the way to move on, as the series Mandalorian said. And thank you very much. And I'm open for questions. And please contact me freely through LinkedIn and other platforms.
Thank you very much, Diego, for your insight and for helping to establish the scene and providing the platform on which to build in our next discussion, our fireside chat. Your conclusions and the need for regulatory sandboxes and forbearance as drivers for fintech market innovation, scalability, and diversification are well aligned with those in our Access Partnership report, which you kindly referenced in your opening remarks. As Chris noted, that report is now available for download from our website, and we've included the link to it in the chat box on the platform today. If you have questions or would like to discuss the report further, please do not hesitate to contact myself or Chris Casarubius, from whom you heard earlier, directly, or through the info@accesspartnership.com email address. And you can also follow us on Twitter at Access Alerts or on LinkedIn, or subscribe to our newsletter. Now, the benefits of successful digital transformation can be enormous for national economies and companies in today's hyper-competitive global markets. Against the backdrop of a global health and economic crisis, no company, and indeed no government for that matter, can afford to ignore the opportunities that technology offers to improve day-to-day services. Financial technology, fintech, is a major enabler of digital transformation, challenging traditional structures and improving efficiency across the financial services value chain. Fintech, as a technological enabler, is seeing rapid growth in emerging markets, improving financial inclusion and serving as a catalyst for innovation across different sectors. However, in these markets, there are still large gaps in access to financial services. As Chris referenced, 1/3 of adults, 1.7 billion people, still lack access to a basic transactional account. This, paired with low savings rates and insufficient access to credit, is making the case for fintech more visible. Governments need to take stock of the wave of innovation being led by fintech companies, while addressing issues including financial inclusion, competition, enabling regulation, consumer protection, and cybersecurity risk. Tackling these priorities is challenging for all stakeholders and requires a thoughtful approach from innovators. So how can fintech successfully navigate the challenges of emerging markets? To help answer these questions, I'm now joined by our industry experts, drawn from leading fintech companies across Latin America, Africa, and the Middle East. We have Maurizio Orsolini Filho, head of Brazil for 99Pay. Maurizio heads 99Pay, Didi's digital wallet platform. He's an expert in business planning, corporate strategy, financial planning for M&A, market analysis, financial and operational modeling, corporate finance, and stochastic analysis. We have Naomi Amobi, legal and regulatory counsel for Paystack, a payment service provider in multiple countries in Africa. Her role involves managing regulatory aspects of Paystack's ongoing Pan-African expansion and monitoring the development of applicable laws and regulations that affect the fintech ecosystem. Finally, we have Elvis Brahe, Chief Technology Officer with Weasel Money, a mobile money player in Africa. Weasel Money is a member of the BCP group and is present in 4 African markets today and is planning to expand that reach in the coming year. BCP Group is the 6th largest banking group in Africa, and it is the leading banking institution in Morocco. Elvis is a senior technology management professional with hands-on experience in new business development, strategy, and operations in the fintech and telecom industries. Now, we will hear from each in turn to present themselves, their companies, and their key lessons learned when implementing different fintech projects in their respective markets. Over to you, Maurizio.
Hello, everyone. Thank you so much, Colin, for the introduction. Hello, my dear fellow participants and all the audience who's listening to us, right? So it's a pleasure to be here and to tell a little bit about the story of what we have been doing, right? So for the last 4 years, I've been very blessed to be in this journey with Didi, which is the leading ride-hailing company in the world, right? And in Brazil, we go by the commercial name of 99, since Didi acquired this Brazilian-founded ride-hailing company, right, since 2018, right? And since we are a B2C company, our focus number 1, 2, and 3 is our users, right? So given that, we're always seeking for opportunities to increase the safety within our platform and especially also the value created to our users, right? So for the past a little bit over 1 year, we have been working on this new project since which is the driver and passenger wallet solutions we have been developing, right? For drivers, we had this for a little earlier, and for the passengers, we'll just launch this in July, right? And the idea is that we can create an ecosystem of increased value for our customers. So our objective is to increase the value for the money. So as we say internally, right, $1 within our platform is worth more than anywhere else, right? Especially what regards to our services. And it's been an incredible journey, right? And because we have been very fortunate to reach some of the goals we set. And which are the goals, right? So number 1, we have as a matter of fact, I don't know if you guys know this information, but around over 70% of all the trips paid for ride-hailing companies in Brazil are paid in cash, right? And that brings many frictions within the platform, right? So regarding to create a new solution to fix that problem, right? To increase the safety for users and to have better value for the money, we did launch the wallet with increases and democratizes this digital payment and payment method transformation, which is already occurring in Brazil, right? As Diego mentioned, there are a few initiatives of the central bank regarding that. And also, this behavior has been accelerated by the COVID crisis, right? So it's kind of a bittersweet feeling. It's a terrible thing what happens, but this brought some new opportunities, and the companies who adapted faster are being able to reinvent themselves and bring better solutions to the users, right? And this is what we have done. So as a matter of fact, on the cities where we launched already, we were able to reduce around 10% of the trips paid in cash. And this has no precedent. That has no precedent in the industry, right? So I think we believe this is a phenomenon that has come to stay, right? And given 99's and Didi's technology capabilities, our capillarity, we're present in over 1,600 cities in Brazil, right? Given that and the user-centric approach, we were able to reach unimaginable targets. In the cities where we launched, we estimate to have reached over between the top 3 and top 5 players in the market, right? In market share. So it's been an incredible journey. There's still lots to do. There's lots we can do, but that's not our focus. We want to do what brings value to our users, and that's very challenging, right? Because the behavior is changing, and what was priority in the last 3 months is not the priority now, even for the users, right? So that enables us to build the capability of quickly reading the user behavior and associating ourselves with trustworthy and flexible partners, which enable us to bring these new solutions, quickly adapt, test and learn, and every time make the user value increase for our platform. That are the challenges we've been facing now, but so far we've been able to reach outstanding results and be one of the protagonists of this digital transformation and democratization of the access to financial services in Brazil. Thank you very much, Colin.
Thank you, Maurizio, for your comments and insight, and for sharing some of the experiences that you and 99 have experienced in Brazil in relation to the role of digital transformation in ride-hailing. So with that, I will now turn to Naomi. Naomi, over to you.
Thank you, Colin. I'm the Legal and Regulatory Counsel at Paystack. Thanks for the introduction. I agree with just the fact that there needs to be some standards that are rolled out in Africa that are tailored to enabling an environment in Africa. Nigeria in particular, where we've seen like a lack of regulations or a bit more of like an aggressive approach to fintech players in the market. There's usually a need to make sure that we're engaging regulators more regularly, making sure that we're conversant with what's happening on a day-to-day basis, just to make sure that we're able to protect the companies and the new methods and non-traditional payment methods that are being rolled out. I think regulatory frameworks definitely aren't as robust as what we might find in the UK, for example. What has been published by the Financial Conduct Authority, but there are regulations that affect players in various fintech sectors. For regulations and policies that do exist, that we are currently working with, regulators have adopted a test, and learn approach. But this is a qualified statement because it doesn't often happen, the way that it should. It doesn't always happen with, and it also doesn't always happen with like the relevant frameworks. What might be commonplace is for like a 5, 10, or 20-year plan to be circulated for comments before policies are adopted, and regulators or like the legislative arm of government may use this opportunity to gather feedback and predict impact. And I mean, having this long-term view is beneficial. We've seen it happen in Nigeria with the 2030 payment system vision, and in Kenya with the 2020 national ICT policy guidelines. But then affected stakeholders in a much wider group have to wait and see how it actually impacts their business in reality when guidelines are implemented with specific obligations. I believe where we need to do a lot more work is on stakeholder involvement, like a test and learn approach in the day-to-day, just figure out how this test and learn approach in the day-to-day policy implementation would really affect how businesses work. What I've witnessed happen more recently, especially in the West African market, is the publication of enforceable regulations with like very significant consequences without any pre-warning or like a grace period to comply. Or there may be a grace period, but stakeholder forums are organized after the fact. And the purpose of those forums will be to like seek further clarification rather than advocate for more favorable terms that would be more beneficial to the market. My theory, is that regulators have come under a bit more pressure recently to protect players in the market and not, leave fintech innovators to create whole processes and like systems unchecked. Traditionally, regulation lags behind innovation, but now we're seeing a spotlight being placed on the African fintech market, and significant mergers and acquisitions are taking place, such as Stripe's acquisition of Paystack. And with a worldwide pandemic, there's now like a heavier reliance on fintech service providers. So naturally, with fintech companies handling like more value and volume than ever before, regulators may want to kind of commandeer how players in the market are handling consumer funds. So this results in kind of like a conveyor belt approach to avoid falling behind and not mitigating risks fast enough, or what they see as risks. So yes, I think I think this approach requires like a more engaging approach, requires time that regulators may not think they have, but will actually be helpful for stakeholders, giving people room to experiment or time to adjust to what the requirements may be. Just that, foresight, while these engagements will be beneficial in the long run. But yeah, the approach that should be adopted is one that's like more tailored and more focused on the reality and like what's happening on the ground. A good example of this is, like South Africa's Protection of Personal Information Act, which was published, years ago. And responsible parties have had a while to put processes in place to ensure they can comply with the act. Even the implementation approach, which was adopted by South Africa's information regulator, has been very friendly. Only certain provisions were implemented at various times, and draft notices and regulations were published to allow some element of like preparation before the entire act came into effect. We also saw this in Ghana with like the Payment Systems and Services Act. There was a bill that was circulated before the act was passed as law. The review of the bill gave a number of interest groups like an opportunity to discuss the implications and like have more of a say in what was going to be rolled out at the end of the day. And like the CBN in Nigeria is also like trying to create a platform for innovators to test products and services. They recently published a framework for regulatory sandbox operations last year, which allows products and services to be tested without a license. So I think more forums like this will be beneficial, not just for innovators to who apply to test their products, but for the regulator as well, to see and like understand what goes into working on these products. And regulators ideally should have a standard approach for publishing regulations. I mean, one of the examples I mentioned were acts and bills, which already have like legislative like processes. But I think for more day-to-day regulations, we should have like processes in place that allow for drafts and timelines for comments. We should like encourage stakeholder meetings and give fintech opportunities, like fintech companies an opportunity to experiment with new ideas. But this doesn't happen enough today. So we can do a much better job of not applying like a one-size-fits-all approach.
So thank you, Naomi. I take from your comments that one of the key lessons learned by yourself in Paystack is that there are real benefits to regulators and administrators more openly engaging in stakeholder consultation, identifying specific issues and collaboratively working out proposed solutions to test and learn from those solutions prior to moving straight to adopting the implementing legislation. Is that a fair comment?
Yes, that's correct.
Yeah. Oh, okay. Many thanks for that. And now we will turn to Elvis, but before we do so, may I just remind our audience again to submit their questions to the panel via the chat box. Many thanks, and we'll return to the Q&A after we hear from Elvis. So over to you, Elvis.
Thanks a lot, Colin. Hello, everybody. Yes, we have as fintechs some key challenges, mainly implementing disruptive technology to improve the financial inclusion, mainly in rural communities. And the three key challenges that we may face. The first one is the access channel to the customer and partner. Many fintechs are based on mobile application and web application, and internet connection is a prerequisite to make the service available for customer and partners. And most of the fintech, except the one that are linked to mobile network operator, don't have access to USSD technology. Even if a regulation is opening in a lot of countries, but it's still very expensive and very difficult to access. The second point may be the let's say identification of the customer, as a lot of central banks are insisting in the fact that we may have some important document from the customer, be sure that we are able to authenticate the customer and sure that the information that the customer is given is the one that is on his, let's say, identity document. So we have this point also. The last point is the awareness, the digital awareness of our reseller. Most of the fintechs don't have shops in the country. They are basing their representation on the reseller that are available and implanted in all the different countries and different areas. And then those customers, mainly the one in rural community, they are not really comfortable with digital solution when everything is becoming more and more digitalized and we are avoiding physical contact with our customer. For sure, to surmount those kind of challenges, fintechs are working in some new technology, mainly the NFC, the QR code, and also there is some possibility that some startups are giving now, where they are giving the possibility to use web services through SMS, through encrypted SMS for sure. The other point is more and more fintech are going for now self-registration to ensure that the customer itself or the reseller is able to do the registration of the final customer by taking some photo of the different document and then send it back for checking. There is some possibility in some country where before the validation of those documents, then you can have a light, let's say light profile, which will help the customer to access a minimum level of services. And the last one is all the different channels that we are putting in place using the media that are consuming very low bandwidth of internet, and then we are using them in order to train the reseller on site. There is another point, which is the impact of cloud artificial intelligence solution to support the growth of fintech in emerging markets. And about that, let's say I will add machine learning in order to make a triplet. So we will have cloud, artificial intelligence, and machine learning. The cloud clearly is helping fintech to move very fast and avoid heavy investment because it's quite difficult to start activity by building a very big data center in order to host the different applications. And in the other side, artificial intelligence and machine learning are helping to explore the different possibilities that are not used traditionally by the financial institution. For example, those two solutions helps a lot of digital bank to differentiate bots than real customer and protect them from the cyber attack as credential stuffing. Just say that it's increased clearly the potential and the possibilities that can be used by fintech to acquire and provide better service to the customer. For sure, it's very important when we are using those kind of solutions, and especially when they are cloud-based, to implement a disaster recovery plan and secure your backup. We faced some issue very recently with French cloud solution provider, which is OVH, where the data center, there was fire in the data center, and then a lot of fintechs that was hosted in those data centers clearly lost all the data, and it was quite a disaster and a headache for them.
Many thanks for sharing those experiences with us, Elvis. Very interesting. You noted that most of the end customers, the users, are accessing the services via mobile and web-based channels. And you also noted that the adoption of cloud-based solutions and machine learning and artificial intelligence applications are solutions are helping the fintech companies to deliver a broader range of applications. From a regulatory standpoint or viewpoint, are the regulations around cloud security and cybersecurity keeping pace with the change, or is there need for regulatory innovation to keep track with the technology, as indicated earlier by Naomi?
Let's say current most of the regulator didn't implement yet clear, let's say, rules about let's say the cybersecurity in those countries. So cloud is very new in our area, mainly in Africa. But there was some requests specifically. As an example, they are requesting to host most of the platform and especially information about the customer and the transaction locally, to be sure that they can have access and they can have the necessary, they can put in place the necessary control. And also they are ensuring that the data center which is hosting the different solution have some specific certification to ensure the security of the data, and also ensure the security of the transaction that people are doing through those cloud platforms.
Okay, many thanks, Elvis. I want to turn to, I note the time and we have got 5 minutes for Q&A. I want to at least get time for another question from the audience. So maybe this one's to you and Naomi. Naomi, do you see a role for African intergovernmental organizations for promoting and adopting fintech-friendly national regulation? Organizations like the African Union or a financial regulators body? So who would like to take that one, Naomi or Elvis?
Let's say ladies first. Naomi.
The only lady on the panel, no problem. I definitely think that there's an important role that the African Union and other like intergovernmental bodies will play. I think in acting as not just in acting in terms of like accountability, but acting as pressure groups. I think we've seen fintech, take on a world of its own, especially in the last 10 years. And without the right support from intergovernmental institutions and without the right support from regulators, it would be quite hard to succeed, because simply we can't adopt the same approach as traditional banking methods. Regulators and institutions, intergovernmental institutions would have to support the ecosystem, impose obligations and standards to ensure that we're focusing on, the right measures. Like without this external pressure without this external pressure to put policies and frameworks in place to, define measures, to define standards, not a lot of people might see it as a priority. So yeah, we're definitely reliant on these institutions to kind of help with the long-term vision and like the long-term plan and the success of fintechs.
Thanks, Naomi. And quickly to Maurizio, can I pose the same question to you? Is there a role for multilateral organizations to assist in developing harmonized regional regulation in your region in Latin America?
Hi, Colin. Thanks so much for the question. Right, I think there is always room for that. Right, I can quote some examples of what's happening. Right, so here in Brazil, the fintech environment has been blooming for probably the past 10 years, right around that. But only in the last couple of years, the regulations and authorities have really started to move to create this a better environment towards democratization, right? So, and also as Diego mentioned in the beginning, right? So most of the countries do not have regulatory sandbox, and always, as a matter of fact, the regulation usually falls behind the innovation, right? And we also know that innovation is also driven by infrastructure, right? So what enabled innovation to happen is the people's access to, of course, electricity, but internet and mobile access, which has been enabled industries and companies to bring innovations disruptive that can quickly scale, right? One of the examples which regulations, the regulatory, the highest authority here in fintech markets is the central bank, right? And lately, probably everyone here has heard of it. They have implemented the instant payment system, which is called PIX, right? And this is an example of the regulation and the authorities moving actually faster than the local industry, and actually driving the players to bring this innovation. They did not do this in per se a regulatory sandbox, but they did implement a very thoughtful road test, including many players in the industry, service providers, payment institutions, end users, and you name it, right? And that was able to create the environment for making the best decision at the time, right? And of course, you cannot predict everything, and new regulations are already changing regarding this, right? And they're changing the rules as it goes. But this is a very clear example of the authorities moving faster and trying to be a vector and a protagonist to make this innovation happen. And what is happening is that the instant payment system in Brazil is actually taking off faster than expected, right? Because of this commitment that the regulatory agencies and this obligation that they got from the players. For example, any traditional bank which has over 500,000 users, which most of them do here, not most of them, but a very big portion of them does, they are obliged to offer PIX. And the way they did to make this takeoff is actually moving to the consumer side, not the merchant side. And the regulation states that you cannot charge the consumer for this. And of course, there's all the benefits of the instant payment system, right? So I think the only parallel we have that happened regarding this is probably the FPS system in Hong Kong, right? India with the UPI is also taken off, but it took a while, right? So they deployed in 2017. So I think it's a good example of how the regulation agency got the benchmark from other countries and tried to apply this. And using its authority and its reach, it kind of drove the innovation and the players in the industry to apply this and get the commitment. And now finally, it's even like all PIX has passed the electronic bank transfers, and we expect it to reach higher number of transactions as opposed to debit cards, right? Credit is a little bit different. Besides that, the first regulatory sandbox is starting now, right? So I think the inscriptions for the first round ended probably 5 days ago, apologies, 5 days ago. And also there's a new project led by the central bank, which is called LIFT, which is an innovation project to bring new players to the industry and kind of drive innovation, right? So I think this is, and for the government, of course, and authorities, it's very important, and they also very benefited from this. For example, when you substitute the offline payment methods by the digital ones, it's much easier for the central banks and the authorities to control and even to collect taxes somehow, right? So I think this is we have some good examples of how all the players, authorities and customers and companies can benefit from innovation, right? But as Naomi said, the structure, we need structure for this infrastructure, and there's a key role, a very key role the authorities play, and only the players, the companies, and the users themselves cannot do this by themselves, right? So the government, the authorities play this key role into making innovation happen and to creating the environment for the innovation to happen. That's my view on the subject.
Okay. Many thanks for that thorough response, Maurizio. So with that, I now have the task of summarising and preparing some closing remarks. So based on our discussion today and from the interviews that we conducted with each of you in the preparation of our report on the subject, the key lessons learned were, I think, are really that the community should avoid surprises and invest in policy capital and situational awareness, understand the policy and politics and regulations in different markets, grants the governments and the fintech industry stakeholders with competitive and commercial advantages. Yeah. Secondly, there is a very clear role for collaborative regulatory sandboxes with regulators working in parallel with stakeholders. Use that collaboration to implement, test and learn approaches to developing new regulation. Thirdly, looking to some of the comments from Mr. Herrera, we need to look to capitalize on the COVID-19 digital recovery. Increased attention to digital financial solutions in the context of the COVID-19 has created momentum for fintech and gives them a seat in the policy discussion. So with that, it's now time to close our webinar. Before doing so, I'd like to take the opportunity to thank our panelists and our audience once again for participating. It's been enjoyable and an informative discussion, and we've identified some of the key lessons for fintech businesses to learn from as they enter new markets. So thanks for joining, and goodbye. Many thanks.